Welcome back, everyone. To those of you who have been away or gone or not seen anything from this channel in the past week, you may have missed it. It's been Uranium Week. I did a few videos on uranium. And in the conclusion of Uranium Week, which I guess is today, very arbitrarily, the theme of this 3 picks for this week, weekly update, will be uranium. So the first way to play the uranium story is to go for a low-cost project that works at fairly low prices. For the sake of today's example, we're going to be adding to Plateau. They could make money at $35. There is some questions, political, and they're a few years out, yes, but those are some of the things that you have to face for the lower costs. That being said, they could make plenty of money at $50. They do need to advance the project, but low cost, that's one way to play uranium. The second way to play uranium is something like Bannerman, which we're going to add to this week, and it is a higher cost. It works at $70 uranium, but they are optimizing, so maybe they get their costs down. But the point is, the higher cost projects are by and large more ready than the lower cost projects. Makes for an interesting dynamic if the price were to spike nearer term, because there'd be less potential supply to come online. So for the purposes of today, we're going to be adding to the Bannerman position, and as time goes on, ironically, if the price doesn't move, the share price will probably go lower, and that'll be our opportunity to add more. Okay, so two things now. You've probably noticed that there's a bit of funny math with regards to the share count of the last two things. There's a reason for that. And the other thing I want to mention is before I proceed, I just want to say that this last thing is unique for this type of endeavor, and it is very high risk, and it is probably a bit early to be doing something like this, and it is time sensitive, so be very careful when even thinking about doing something like this next thing. That being said, I want to talk about it. Okay, so what is this last strategy? Well, let's say you wanted to only have a high quality name, either because you thought all the low quality names would collectively fail or something, or you just only wanted high quality, but you wanted high upside leverage. Well, a strategy that one could do, again, not necessarily recommended, is you could look for out of the money calls on something like Cameco. Now these options, the ones that I've chosen for this example, would have absolutely zero value and would expire in January of 2021, worthless, if the share price of Cameco is below $25 at that point. Now, you would break even at 25.35 because that is the price per call, and then for every 35 cents above that Cameco was, the options would have double their current value. So in theory, if Cameco were to go $3.50 above 25, so 28.50, that would be 10 times the value. And if you were to go to $60, they would have 100 times the value. Now again, these are time sensitive and they will decay if the price of Cameco doesn't go up. They will decay to having absolutely zero value, 100% loss by the middle of January of 2021. And for those of you who are curious, here is an update on what the portfolio looks like at present. So now just to quickly run through some of the other sectors. Gold in the past week kind of broke upwards from that 1270 range where it was consolidating, which is strong. I was kind of expecting it to potentially try and shake some technical people out by breaking the 200, but that didn't seem to happen. Obviously, we can go any direction from here, but the equities seem to be thinking they got it wrong and thinking that it was going to go lower. So we'll see what's going on there. Again, gold's a longer term thing. Lucara. Lucara found a 1,750 something carat diamond, which is the second biggest or third biggest, depending on if you count one, diamond ever discovered. Beyond that, not necessarily impressive. I mean, you can see pictures of the diamond if you want, but basically, it's a proof of concept that their X-ray technology will capture the diamonds and they won't break them because it's possible they broke a big one in the past, which is painful. Um, and the only, okay, well, and then Chorus. Chorus has been doing well recently. It's still a fairly cheap stock. It's not obviously as cheap as it was when we were buying. We're still holding it for now. We'll see. It pays a dividend. It's not expensive. So there's that. And as to shipping, um, it I was underwhelmed by its move up compared to oil and copper. It seems to have put in a bit of a base, but it doesn't seem to be reacting as positively as I would have hoped given everything else's move up. Now, again, I'm not necessarily super bullish nearer term on the economy, but I mean, that's one thing I'm not necessarily making a bet on either way. So I think that shipping will be really good longer term. Shorter term is a bit of a question. So that's my update there. As always, everyone, please do your own research before making any investment decisions. This channel shall not be liable for any losses incurred from investment decisions made as a result of information obtained on this channel. Uh, good luck with your investments. I'll catch you next time.